Rob, I know you believe that our way of life is in jeopardy. You believe things are changing, and this is the reason you wrote and are trying to publish the gold suppression movement. And by way of introduction and to start this conversation off, what does it mean to you that our way of life is changing?
Our way of life is changing, Kenneth, because the stewards of the world reserve currency, namely the people that control the levers of the US dollar centric capital market mechanism, have exercised extremely poor judgment in their stewardship of the dollar as the world's reserve currency. And this is something that is not sustainable forever or in the very long term. And I would suggest to anybody who wants to pay attention, we are very close to a crossroads where the current stewardship will no longer be tolerated by the rest of the world. We're seeing smoke signals that this is indeed the case all over the place, with countries around the world rejecting the US dollar in trade. And that's a fact.
Yeah. Well, I know you worked for the bullion banks. The Bank of Nova Scotia. And I'm questioning, what sort of actions did you see that made you question the system working there, kind of being in the middle of it?
Well, there's a very anti-gold bias in financial institutions in general. Gold is referenced. I found it amazing when I did work for a period of time with the largest distributor and manufacturer of mutual funds in Canada, a company called Investors Group. Investors Group has at the time anyway, had 120 proprietary mutual funds on their product shelf. And they had, they didn't have one precious metals fund, period. But they had 4 or 5 failed internet funds. And when I asked and queried one of my coworkers why we didn't have a precious metals fund, they said, well, management thinks it's too risky. Well, precious metals have been around for 6,000 years. They're the basis of money. They are money. Precious metal has never gone to zero. And yet the largest manufacturer of mutual funds in Canada doesn't have one precious metals fund on their product shelf, but they either do or did have up to 5 failed internet funds. So, to me that speaks volumes, and it just absolutely is a neon sign saying we are anti-precious metal. And that attitude and that expression permeates across the entire retail financial space certainly in North America, where precious metals and ownership of precious metals are shunned, particularly the ownership of physical precious metals. And a big part of the reason why they shun and dissuade people from holding physical precious metal, because there's no way for financial services firms to generate fees when people own physical precious metal. So if you want to,
Rob, that's an interesting point you bring up, because I think many of us believe that the reason why the governments and those in power don't want precious metals to go up is because it's competition to fiat money, and it's a signal to how bad the fiat currency situation really is. But you bring up an interesting point about there not being a lot of fees and great margins on precious metals to include them in the offerings that a lot of these firms might have. So maybe explain that a little more and just expound on that a bit.
Well, I mean, if a bank sells you, let's just say paper metal, they can then turn around. Understand, when you're sold paper metal, which is typically a gold or a silver certificate, quite often the issuing bank will then turn around and charge you storage fees for ostensibly for safekeeping of the metal that is supposed to back the paper certificate. But what happens in the case of paper metal and in paper metal sales, they almost always are called, the metal is not allocated or segregated, which means that they only hold a certain percentage of the amount of paper metal they sell as security for those who might want to redeem. So effectively, they're selling you a product where there isn't physical metal backing up the obligation, and then they're charging you storage fees for metal that they don't even have in their possession and that they're not storing. So it's really a sham to charge somebody storage for something that you don't have in your possession. This is commonplace in the precious metals industry. Ownership of physical precious metal means that people take their assets into their own possession. Typically, they take their assets into their own possession, and then the bank doesn't have access to the wealth to charge fees. You buy a mutual fund, you pay it's called a MER, M-E-R, management expense ratio, which means that the manager of the mutual fund is raking off a percentage of the asset typically on a monthly basis or on a quarterly basis at worst. And this is referred to as the management expense ratio. And this can typically run anywhere from, call it 25 basis points up to 300 basis points of the amount of the funds under administration. But if you buy gold coins and if you bury them in your backyard, no institution has any way to charge fees on what you've done because they don't know where it is, and it's yours. So, but that issue speaks to the whole notion of if you don't have it in your hands, you don't own it. And I'm an advocate of people owning their precious metal, physical precious metal, and having it in their possession, or knowing how they can get it in their possession very quickly. You don't want to have people between your wealth and you, because you just don't need the third-party risk when times become very challenging. And when I speak of challenging times, I can say, for instance, in the financial crisis of 2008 and in the aftermath of 9/11, markets were closed and people did not have access to their money or their wealth. People could not liquidate stocks in the days immediately following 9/11 because the markets were closed. People who own CDs, certificates of deposit, could not cash them. So with the world on its current trajectory, with, as I mentioned, the poor stewardship of the U.S. dollar as the world's reserve currency, and to highlight that, I would only point to the work of Dr. Mark Skidmore PhD economist with his research staff at Michigan State University, along with the brilliant work of Catherine Austin Fitts, former Undersecretary of HUD, Housing and Urban Development in the Bush 1 administration. And they've combed through just two government agencies, namely the Department of Defense and HUD, and they have identified over a period of about 15 years, somewhere in the neighborhood of from 1998 or 9 to about 2015, they have identified $21 trillion of unaccounted for money. This is money that was fraudulently created. This is money that has been siloed in slush funds that are off book. And these funds have been used to finance and perpetrate financial crimes against humanity on the part of our financial elites. And these are the financial elites that I'm going to refer to as the deep state, that have taken the country, United States of America, over in a silent financial coup. And this is something that the world is becoming very cognizant of. And this is why countries are abandoning the dollar in trade, because the people who have been given stewardship of the dollar have literally taken it and run it on the rocks. It's like intentionally taking the Titanic and smashing it into icebergs.
Wow.
This is the kind of crap that we've had to put up with by these financial elites, and this is the kind of crap that Trump is trying to get to the bottom of, and this is why the deep state is running around like their hair's on fire, because they're paranoid and they're scared, as they should be. They're scared out of their skivvies that they're going to be identified and called up and called out and named for their crimes against humanity. And this is a brutal, brutal thing that's occurred. This is the biggest fraud that's ever been perpetrated on humanity.
Well, and it's a testament to all of that they shut down Alex Jones, InfoWars. Just recently, we know that they tried to shut down Sean of SGT Report, but the community uproared and got him back on. But we know there's a crazy battle going on, and I completely agree with you. One thing I would ask is, we have seen the price of precious metals now for years, and it would appear that the elites do have the upper hand on this. But now we have Trump in office, and the headline numbers are very strong. We're having billions of dollars repatriated back into the country. We have 4.1% GDP growth. We have jobs, all over the place. I mean, the unemployment's down. Again, these are headline numbers. I know that a lot of these numbers are manipulated and massaged. But because things are good, you also now have sentiment going against precious metals on top of the manipulation. So would you speak to this at all?
I would speak to what you just stated, Kenneth, in the following way. I have liability insurance on my dwelling. I have fire insurance on my dwelling, and each year that passes, when my dwelling does not burn down or a catastrophe does not occur, I do not cancel my insurance policy. So if you live in California, where different jurisdictions are very prone to wildfires, the fact that your home might not have burned down in the past 3 years, does that make you feel more inclined to not have fire insurance? Or, I'd like you to answer that. I think you can answer your own question.
Right.
Owning
No,
precious metal is insurance. It's financial insurance. And if you view it as insurance, I would only ask you, it's illegal to drive a car in Canada without auto insurance.
I 100% agreed. But I think many people, and I'm asking this for a lot of the people who are disgruntled and frustrated, because I'm a believer in precious metals and I've seen all the numbers. But I think people are questioning the fact that things are out of control or things are going to implode because they haven't seen something happen over the past few years. And gold is now closer to 1,200 than it is to 1,300. And it's just an ongoing thing that isn't really happening. It isn't materializing. So I know a lot of people are getting frustrated about this. So,
well,
the question is it really going to happen?
Well, my belief is that it's not a question of whether it's going to happen. My belief is it's only a question of when it's going to happen. And when the dollar is dismantled or knocked off of its perch, I think what we will see in precious metals is a rise in price that will make the run-up in Bitcoin look like child's play. So, with the amount of dollars and dollar derivatives that have been created, and the amount of debt there is in the system, for the dollar or for precious metal to let's just say normalize itself by historical standards, we would need to see a rise in the price of precious metal. To me, a rise in the price of gold under the right conditions, to see the price of gold go from $1,200 to $60,000 or $100,000 an ounce would not be ridiculous to think of. I actually believe, I'm 58 years old today, I believe I am going to live to see a day when you cannot buy an ounce of gold for fiat money in any amount. So all I will ask you then is, what is really the price of gold if you can't buy any with fiat money? And for people who think this can't happen, I would just like to remind everyone of the perfect track record fiat money has. Every fiat currency ever invented by mankind has failed spectacularly. They all end in a hyperinflationary blow-off top. And I would just remind people that in 1990, a Zimbabwe dollar was worth roughly 50 cents American. And the last time that Zimbabwe actually printed banknotes, I think the largest denomination was a $100 trillion Zimbabwe banknote. And while that was circulating, because it's not even circulating anymore, if you had 600 trillion Zimbabwe dollars, you could buy 3 eggs. Zimbabwe currency devalued to the point where it was not even proper or suitable to use it as toilet paper, because the physical characteristics in the banknote, the Zimbabwe currency, it didn't biodegrade if you wiped your behind with it and put it into the sewage system. It clogged the sewage system. So the money was not even suitable to use as toilet paper. And this is ultimately how, and ultimately the value to which all fiat currencies gravitate to, their true intrinsic value, which is zero. This is in store for the dollar. It's not a question of if, it's only a question of when.
Wow. Rob, I guess by way of, conclusion and, closing out this interview, we're talking about things changing. And I know you're very concerned about, future generations. And, maybe talk about it from the perspective of, parents or older individuals giving advice to younger generations. What is your advice? Like, what do you see down the line for, our kids and our grandkids? What are they to do and how are they to prepare for the economy of, 10, 20, 30 years from now with all that you see coming down the line?
I truly believe that the youth of today certainly need to have exposure to a little bit of history, a little bit of monetary history in terms of how fiat experiments have panned out in the past. The blind faith of our financial elites in Keynesianism is, in my view, a disgrace, because the Keynesian monetary system that we are imbibed in today, by its own very design, John Maynard Keynes, people pointed out to him that the system that he was advocating for the world, namely the Keynesian monetary system, fractional reserve monetary system, by its very design, it was meant to fail. And when this was pointed out to John Maynard Keynes in the day, he said, well, that doesn't really matter to me because in the long run, we're all dead anyway. Well, all I could say to people is welcome to the long run. We are now at the long run, and the system is dying. The evidence that the system is dying is written all over the walls. Countries around the world are abandoning the dollar. This is a fact, and this is something that is gaining speed, and this is something that's irreversible. And this will continue till the point where you won't be able to spend your dollars.